Well, let's move on. Let's focus on JSW Steel. Well, that one delivered a good set of numbers. I caught up with Jayant Acharya, joint MD and CEO of the company, to discuss their past quarter's numbers. Let's hear out what they had to tell us. Well, I began by asking them about their India EBITDA outlook and also the cost of coking coal. Listen in.
Our India operations EBITDA was about 6,923 crores, which translates to about 11,900 rupees per ton, about $143. Our NSRs went up, our realization went up marginally. We did increase prices in October, but however, there was a pressure from imports, increased imports and low-priced imports, due to which the prices did correct during November and mostly December. Our coking coal cost, we had indicated, would go up by $20 to $25. It went up by close to $21 in the last quarter, and that impacted our cost, including the price increases on iron ore. So the costs were higher. It was marginally offset by some improvement in the NSR, which we could manage through a better blend.
Got it. What about for quarter four? What is the price realization we should be working with in comparison to quarter three? And also coking coal costs, as you mentioned, it's up by close to around $21 per ton for the past quarter. For this quarter, what should be the rough estimate that it moves up by?
So coking coal prices, Nigel, are still elevated, and we are seeing numbers close to 330 FOB Australia. We are continuing to see elevated numbers probably for January, March as well. We probably would see an increase between $20 to $25 in our blend cost in quarter four as well. Iron ore prices have also gone up, so to that extent, cost pressures are there, which would put pressure on the margin. Having said that, from a pricing perspective, I would say that the global steel prices have moved up, and that is something which has done two things. One, it has opened up the international market, so the export volumes are improving. The realizations are better. And now the import prices and our domestic prices are close to parity after the increase in global prices in the past few weeks. So therefore, the import will be lesser. So from a volume perspective, I think you will see in India the imports falling, the exports going up, and therefore that would balance quarter four. So from an outlook perspective, I would say that quarter four will be better. Seasonally strong quarter supported by export volumes. And we do expect that the global steel prices, which are higher, would reflect in the Indian market in the coming months.
So just a short point is EBITDA per ton in quarter four for India business looks like it'll be as good or a little bit better than quarter three. Are we getting that correct?
It's difficult to comment on the margin per ton, Nigel, but the way I would like to say is that the costs are going up because of coking coal and iron ore. And it will be partly made up by a better blend of exports, some improvement in the prices, which we foresee in the domestic market, and a stronger volume overall. So the absolute numbers will get a push from that.
Okay, all right. A couple of your subsidiaries have done really well out there. You know, the Italian business seems to have bounced back in comparison to the last quarter. So give us a sense about how international operations are shaping up. Do you expect a further improvement? Point number one. And point number two, Bhushan Power and Steel, the asset that you acquired, well, that's ramping up very, very well. What's the outlook out there? If you could give us an EBITDA per quarter run rate.
So from an overseas operations first, I think overseas operations have done quite well, as you rightly said. The production levels at Ohio have been very good. We did good productions in quarter three, and our capacity utilizations have improved to 74% from 42% odd in the previous quarter. And we expect that the volume story will continue in the quarter four as well. Baytown has done very well, with respect to the EBITDA overall on their business. And therefore, we have seen an overall positive EBITDA from the overseas operations in the US. Italy has done particularly better, again, on the backdrop of rail orders, which we have both from the Italian government as well as from the export side. Italy has done better, and we expect that the quarter four volume and the EBITDA levels will continue this momentum. So overseas operations has done well and will continue to be, I think, in a similar kind of situation in Q4. BPSL has done better. BPSL from a volume perspective has done better. The EBITDAs have improved to some extent in the Q3. However, we expect that in the Q4 they will do slightly better. One, because the volumes are increasing because our new phase of expansions are getting commissioned, and that would add marginal volumes in this quarter and balance in the next quarters. And from a cost point of view, because we have commissioned some of the cost-saving projects in BPSL, they would be able to gain on some of the cost advantages in this quarter. So it should reflect in terms of EBITDA per ton better than what we have seen in Q3.
Got it. All right. What about, a couple of steel assets are on the block. Is JSW interested? I want to ask you point blank, is JSW Steel in talks with Vedanta for their steel unit?
So, Nigel, I think we have discussed this question in the past as well.
No, but I want an answer, sir, this time, because the street is a buzz that it's a possibility.
Yeah, so we had mentioned earlier also that our interest is more on the mining side of their business and not as much on the steel side because it's a smaller steel operation. And we maintain the same thought process today as well.
All right. So you're in talks for Vedanta's Karnataka iron ore mines, because that would be a natural progression, right? It's y'all require iron ore, they have that, so y'all would be interested in Vedanta's iron ore mines.
Right.
What if they're not selling only the iron ore mines and they're selling it as a package? You ever take the steel unit as well?
We will see. That is a part of the discussion which will, I think, emanate over the course of time. But as I said, our focus would be on the mining assets and not as much on the steel assets.
Final question, what about budget 2024? What's on your wish list?
I think this is an interim budget. So from that perspective, what we do expect is from the government is that they would continue their infrastructure investment, the public capex, which has really done well for the country at large. The manufacturing push, which is happening through various incentives and schemes which the government has laid out, is also doing well. We expect them to continue this journey with respect to the growth of the economic activity. And on one concern which we have is that the imports are going up into the country. India is doing well. It's a bright spot in terms of economic growth in the world. We should be wary of cheap imports landing into our shores and hurting the investment of Indian manufacturers. Maybe appropriate steps need to be looked at as we go along.
All right, that's the word coming in from JSW Steel. But